Hey guys, welcome to my YouTube channel regarding investments. The goal of this channel is to provide valuable investment advice and good stock picks. If you like this channel, please subscribe and click on the like button. So let's come straight to it. So I want to provide you two stocks with potential return of greater than 50 percentage. Now, a little bit of my background. I finished CFA Level 1 exam, and I've been investing for clients in the past 10 years, and I think I've been successful. So that's kind of my background. So let's get straight to it. So here is my first pick. The ticker is called USB. So this is a US bank. This is so let me come to so for any investing, what I want to provide is good, solid research. Two is I believe in value investing, something that Warren Buffett has followed over the years, and then the reasons behind the investments. So let's dive straight into it. And so my first, so let me take my research paper here. So okay, so here you go. So let's look at US Bank. So US Bank is first and foremost one of the largest regional bank with assets of more than $290 billion and deposits of $362 billion. So when I say regional bank, you can't compare this to a Chase or Bank of America. It's smaller than that, but at the same time, it is present in multiple regions and it's a growing bank. So let's look at first of all, U.S. Bank provides all sort of banking, including corporate, commercial, consumer, wealth management. They do not have investment banking, which I think is a great thing, especially during crisis. So let's look at some of the advantages or the moat. I believe every company, I believe when you invest, should have something called moat, where they should have a competitive advantage over its competitors. So let's look at some of these in detail. So first point I already mentioned. The next, I think one of the most important point here is, or why this bank has a moat or a competitive edge over the other, is due to its underwriting standard. So they, on an average, lent to customers who have a FICO score of 750 for all the residential mortgages. And average loan to value, meaning how much money you have to deposit, is 69 percentage. And one of the best way to really judge a company is by reading annual reports and investor presentation. So let me take up the US Bank investor presentation. And here, so this is basically the latest investor presentation that they did as of 2020. As you can see, the COVID stuff and things like that. So here is the key detail here, like the average FICO score. You can see it's all over 700, which is a big deal. A lot of banks do not adhere to that standard, and that's a big deal for a bank that has such high quality. So that's a that's a very important point. And then let me come to the next point. They have had consistent revenue and profit growth over the years. So for that, what I do is you can look at Yahoo Finance or you can look at Bloomberg for these details. So if you go to financials, you will see kind of the growth that this company has had over the years. So as you can see, from 2016, their revenue grew from $21 billion to close to 23 as of today, and their net income also has gone up significantly from 5.5 to 6.5 billion dollars. You can see that. So that's the other thing. The balance sheet looks clean. They've had a consistent revenue growth, and now let me come back to the other presentation here. The other important thing when I look for a stock is whether it's trading at something called PE. PE is price to earning, meaning how many times it's earning this company is trading at. And right now it's trading at 9, which is the cheapest that it has traded in 5 years. And also it is lower than the average PE for regional banks of 17. meaning that you're getting a good quality asset at a reasonable valuation. Uh, the next important point is all the loans. Every bank gives out loans. Now, how many of them are going to default, or how many of them are non-performing, meaning that they're not making payments? So, so if, again, from the investor presentation, you can see they have an NPA ratio of 0.3 percentage right here, which is low compared to most banks. So that's very good. Then the other important thing is capital ratio, meaning how much of buffer that this bank has if something goes wrong. So they have a capital ratio of 9%, and the requirement by Federal Reserve is around 7%. So this is called the Tier 1 ratio, which if somebody wants, I can give more explanation. But yeah, so it's kind of capitalized. The other important thing is it provides you a dividend yield of close to 4.34 percentage, meaning that if you invested $1,000, you'll get $43 in a year, or $10,000, you get $430. The other important point is Warren Buffett is obviously, as you all know, is one of the greatest investor, and he's one of the largest shareholder who owns 150 million shares worth 6 billion. So that's a big advantage to this bank. They're also growing. They're expanding into other regions. They have a pretty good balance sheet too. Now, every investment comes with turn risk. So I don't want to just provide you all the advantages and say, oh, this is the best investment. But let's look at the risk. One is obviously if the COVID crisis worsens, the possibility of delayed or default of loans. Obviously, U.S. Bank has lent to multiple industries. And as you know, as you're aware, here you can see that saying the impact of the COVID has disrupted several industries. There is stress to some of these industries. So if that worsens, yes, you're going to see a default, you're going to see provisions for bad loans coming up. The credit provisions are going up, meaning money set aside for bad loans. And then finally, the cut in dividend, which I don't see that. It's very unlikely. So so overall, the verdict is a great bank trading at a discount price, meaning PE of 9 compared to, the 14, 15 over the years, or lesser than the industry average. Also, they have high rigorous standard for loans. As I mentioned, the FICO score, they have a pretty good capital buffer. And then, so it's a good risk reward ratio. I have it in my own portfolio and for the clients. So what is the scenario that I see? I do see a long-term target of $62, which is more than 50% from the current level. And I get it this by an EPS of 4.4 multiplied by a PE of 14 times, and the time frame is 2 to 3 years. So that's kind of the my goal. And as you can see here, I do have US Bank in my portfolio. So I'm not just talking, but rather really investing. And as you can see, it's already up significantly from the time I invested, but I still believe I've been adding. It's still a good price. Okay, the next pick. So that's the number one pick. The next pick is it's a little bit more easier. It's an ETF. The ETF ticker is JETS, JETS. So let me come to that one here. So this is called the US Global JETS ETF. So what this is basically a holding of. It's an ETF that holds multiple airline stocks. So let's say the ETF has about $900 million. So this 900 million is invested in large airline stocks. Obviously, as you are aware, airlines have been under significant pressure. But I believe to for a prudent long-term investor, it might be a good time to enter. And as you can see, Southwest, American, Delta, United, SkyWest, these are the these are the holdings of this company. And as you can see, it yields about 2.6%. So it gives you a dividend. And then it has gone from $11 to 32. So right now it's at 20. So let's look at this. So year to date, it's 45% down. It's got assets of 900 million. As you know, the COVID crisis has brought the whole industry. so it might be a good time to enter. Second is I believe people need to travel, and air travel is one of the fastest option to get from one place to another. So I do see a pickup in airline. The good thing with this ETF is that you're not just owning one airline, you're owning multiple. So let's say tomorrow American Airline goes bankrupt, you still, the ETF will be down, but still your risk to the downside is limited. I do not see a scenario in which all the airlines do go bankrupt, which is very unlikely, but it could happen. Now, if the COVID situation gets worse, also another buffer is I think the government will support the industry because it provides huge number of jobs. So, example, PPA loan. So now let's look at the risk. The risk to these is obviously if the COVID crisis worsens, air travel could be restricted and the whole industry could see a dramatic fall in revenue. So, meaning that it could come down. But I still believe it's a good investment where you can invest some and then invest more if it comes down. The other is like I already mentioned, the airline going bankrupt. So it's a high risk, high reward investment. Thesis is based definitely on the fact that the COVID situation is not going to worsen and that people are going to travel. Price target is 32, time frame is 2 to 3 years. I do expect this ETF to hit an all-time high of 32 as travel peaks. So these are the top two picks, which I believe can provide you return of more than to a 50 percentage. Obviously, my out of this, the topic would be U.S. banks simply because of its high quality. But I think ETF provides a good way to diversify. Anyway, if you like this, please subscribe and let me know what are your thoughts. Anyway, thank you.